Hi guys, today we will be talking about two important things. First is the Fed's decision to leave its key interest rate steady and why the short-term market movements shouldn't scare you. My name is Parul, I'm an economist. So let's look at today's news. The Federal Reserve decided to keep its key interest rate steady between 4.25% and 4.5% after cutting it 3 times since September 2024. So in their post-meeting statement, the Fed gave a few hints about why it decided to keep rates steady. It sounded more positive about the job market and noted that the unemployment has stayed low and the overall labor market remains strong. But it removed a key phrase from December's statement that suggested inflation was making clear progress towards the Fed's 2% goal. But now instead, the Fed acknowledged that inflation is still somewhat high and above their long-term target of 2%. A strong job market and sticky inflation means that the Fed has less reason to cut the rates right now. The statement also reiterated the economy is still growing at a solid pace. Okay, so overall markets reacted negatively to it, and after a somewhat recovery yesterday, the markets are again having a bad day. As you can see from all the charts, that all the indices are showing a downward trend this week. But as an economist, I want to tell you that these short-term market fluctuations shouldn't really scare you as an investor, and here's why. First, short-term panic doesn't equal long-term trouble. Stocks go up and down all the time. 2 days ago, investors got nervous about AI competition, but that doesn't mean companies like Nvidia, Microsoft are suddenly bad investments. A single bad day or even a bad week doesn't decide the future of a company or the entire stock market. AI is still the future. Yes, a Chinese company released a cheaper AI tool, but AI is a massive industry with room for many winners. US companies still have great technology, resources, and strong customer bases. Competition is normal in business. Think of how Apple and Samsung both make great phones. It doesn't mean one will disappear overnight. Third reason is that investors need to think about long term. If you invest for long run, like years, not days, these short term drops don't really matter. In fact, they can even be good opportunities to buy stocks at lower prices. The best investors won't panic when the market moves. They stay patient and focus on long-term growth. People who really get affected by these short-term movements are the ones who are traders, not investors, or people who gamble in terms of betting on options, etc. But as an investor of a diversified portfolio, for the long term, you should be fine. So instead of worrying, use this as a learning moment. The market is unpredictable, but history shows that patience and smart investing win in the long run. And to prove this point, let's look at the overall market trend in the last 10 years and since inception. So you can see that there are various dips because of different reasons. But if you have invested in a broad-based index fund such as S&P 500, you'll see how it has been going up overall. And this is what even seasoned investors like Warren Buffett will suggest, that for an average American, instead of cherry picking stocks and panicking too much because of the stock price movement, just keep your money invested for the long term and you will be fine. And he actually suggests investing in S&P 500 index fund. And I have put it in the link where you can buy the index fund through Vanguard, Fidelity, Schwab. Or if you don't have that much money, you can always invest a small amount through an S&P 500 ETF. And the Fed's decision relates to the data that they get, unemployment data as well as inflation. Until the inflation is well under control, they cannot afford to keep cutting interest rates. So this is all for today. Don't panic so much about the news and stay invested and focus for the long-term growth. So my name is Parul. I'm an economist. I hope this video clarified your doubts. Take care, guys. I'll see you in the next video. Bye.